The cash seems to be flowing thick and fast out of the US at present. Global markets got very excited overnight as the US Treasury announced full plans for the financial sector. Effectively, the government is going to help fund private investors into buying troubled assets from the banks. This continues on the theme of stabilisation of the financial markets being the basis of the global recovery. The US government faces an extremely tricky balancing act in many regards. Markets have been through a period of excessive risk-taking, but now the risk is that the financial system won't take on enough risk. The US has clearly spent much time assessing how best to attract private investors, and it looks like some of these investors are now coming out of the woodwork. Markets showed good gains with most global indices up over 3.5% across the board overnight. The mood in markets has definitely been a bit more positive over the past week. Investors are dipping their toes in the water to test the temperature at present. Since September, that water has been pretty icy, but it seems to be warming up, with our currency once again on the move overnight, now well over 56 cents and trying to break through 57 cents. The Aussie dollar is also up against the US, now over 70 cents. Today's US housing data in the form of existing home sales probably helped to extend the positive tone, increasing in February after months of declining. Don't get too excited yet. 45% of these sales were distressed and median prices were down 15.5% on last year. The fact that bargain hunters are seeing buying opportunities is promising, but there is still about 10 months worth of supply on the market. It remains to be seen whether the more positive tone of late can be sustained. The US packages are laying the groundwork for a US and by association global economic recovery, but the prospect of more bad news likely to be divulged by banks, more dire US economic data, not to mention the worries surrounding the Euro bloc and Japan, mean that markets will likely face more tumultuous times in coming months. No sign of an easing in the land market. Local land prices are still up close to 50% on what they were this time last year, and meat companies don't seem to be pulling back at present. Market talk suggests there are winter contracts for over $6 in the market. When we continue to hear about volatility around the world with forecasts changing rapidly, these contracts should provide some surety to the sheep sector after a couple of tough years. We have heard a lot about the lower lamb kill. Lamb numbers are expected to be down 23% this year. When we put this into context, this leaves a big gap in supply to our export markets. Over 50% of our lamb goes to the UK and EU. With their sheep flocks falling in 2009, it provides every opportunity for international prices to remain sound over coming months. Although I still maintain caution with the sector, given it is probably one of the few sectors globally yet to be affected by the global economic turmoil.